All right, what's up, guys? I'm going to teach you guys how to trade the simplest way in under 5 minutes, okay? So, first things first, right now we're looking at a chart of Ethereum, okay? This is on the 1 day chart. So, every single one of these candles is 1 day, okay? And basically what a green candle means is that the price opened here, you can see on the right, 1342, and it closed the day at 1581. Now, the body, this is the shaded part here, okay? That is the open and then the close. Now, if you see a wick, right? If you see a line coming out to the upside, for instance, let's go with this candle right here, right? This one opened at 1223, okay? It closed at 1356, but at some point during the day, right? It hit all the way here at 1423. So if it started here and it hits here at some point, there's going to be a wick here if it closed below. Same thing, at some point during the day, it went down to here, right? But it ended up closing here. The inverse for a red candle, right? It opened the day here, closed here. So you can see the date at the bottom of everything, okay? And you can understand at least a little bit on how to read this chart now. Some people use regular candlesticks like this. Some people use what we call Heikin-Ashi candles. Some people use line graphs, etc. Okay, I like to use candlesticks. So, first things first, this is the chart for Ethereum, right? We see here that pretty much at the end of April, we had a huge move start to consolidate here. And then in May, we saw a huge dump down. We had another consolidation here, move down, right? And then we have what we call a retest here. Okay, so you can see here that price consolidated right here, right, for about from May 11th to about May 25th, broke back down, came back up. Now, when it breaks down here, right, this is what we call a support. The price keeps bouncing when it touches right around here, right, and that's at that $1,950, $1,900 level, right? So when it finally broke down here, you can see there was a big move to the downside. Now, when it comes back up, your previous support is now going to be your resistance. And we call this spot here your first test, right? It's the first test of that level that you just broke. The first test is the best test, okay? So we're gonna draw our line here just to show where our previous test would be, right? Right here. So we see that price comes all the way down, right? There's a lot of action at the lows here. There's the same thing here except inverse, right? We have our resistance here, right? And we have our support down here. So once price broke that resistance here, right, we were able to go up. Now, is it any coincidence that the price stopped right around here and consolidated, right around here and consolidated? No, right? Because that is also the previous level from here, okay? Now, the reason I'm using this level and I'm showing you this one that I have marked exactly is because the trade that I took short was actually up here. Now, this was just a few days ago. It was about 2 weeks ago. Why did I take a short here? Well, we had this previous level drawn out. We had a big move down, right? All the way down to under $1,000. From here to here was another $1,000 move. That's a 100% move from the bottom to the top here. Doesn't look like it, right, when you look at this overall, but from the bottom to the top was 100%. So we know that this right here, right, is the previous chop block we had before another death, right? But then we know over here, right, this is where we can see some resistance because this is our previous level, right, of consolidation before the move down. It also is a key psychological level of 2,000, okay? So what we have here now is 2 wicks to the upside, right? We have 2 days in a row, 3 days really, of rejection. That means at some point the price came up here and dropped back down, okay? So this is a good area to take a short. And really how you would take a short is you'd enter at the end of the day because you want to wait for the candle to close, right? Let's just say we entered right here at 1960. I entered around 1970 for this one. Your stop loss you would put somewhere above these wicks, right? Above this line that we drew back from here. So somewhere above 2050 or right at 2050 or so. So let's just actually type it in exactly. Let's just say 1970, we entered. We would close it, right, for a loss at 2050. and your target, okay, is going to be this previous level right here, okay? Your target would be down here because what? Well, we said that this lined up with what? This previous level that we had here, 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 right? So we can draw this out here, okay? And you can see this is our first level to take profit. Now the next one could be at the bottom of here or here, right? And you can see that these levels hit. Now when you're taking this trade, right, even just this first target is going to be a 3-to-1 trade, right? We are risking, you can see how much. Let's just type this in here. We'll say 1725 is our target, right? We're risking $80 to make how much? 245, okay? So that's how you're supposed to trade a 3-to-1 R to R, 2-to-1 R to R. The better, the higher R to R, the better, as long as it is a probable trade, okay? For every 3 trades that we lose, we only need 1 trade to break even. For every 1 that we win, we can lose 3 in this scenario and still be break even. And that's pretty much it, guys. That's you can add some more stuff. You know, if you guys understand trend lines, right? You can see that we broke the trend line down here, right? And there was a big move down. But right now, you know, this was the exact level that I shorted. This is how you can use daily levels in order to find good trades. Right now, I do expect there to be a small bounce from here, just because we are bouncing off that previous level. But if not, where do you guys think the price would go? Probably down to here, right? The top of this previous resistance. So if we break down from here, we're looking at 1240. If not, hopefully we go back up to 1600 or 17. And that's it, guys. Hope you learned a little bit.